Hi everyone, welcome to FOREX Trading Empire live top-down analysis. So last week top-down analysis, I talked about the daily fair value gap. For those that have been going through the top-down analysis, I talked about this daily fair value gap. I talked about this other blog. I talked on how I will be trading, on how price will be respecting the other block or respecting the daily fair value gap. So this week, I'm currently looking at price using the daily fair value gap as an inversion fair value gap to trade through the order block, which price already traded below the mid range of the order block, which is a high probability to tell you that there's a low chances in price respecting the order block, and more often price will trade through the order block to go for the sell side liquidity, which is my current draw on liquidity on the dollar index. I want to see lower prices for price to trade lower to run the sell side liquidity. And on the 1 hour time frame, on the live top down analysis, I posted live top down analysis trade review. I talked about price using this daily fair value gap as an inversion fair value gap to trade to the mid range, that I will be looking for those intraday setup for price to trade lower. That I will be anticipating lower prices for price to trade to the sell side liquidity. So it will 1 hour downtrend, lower prices for price to run the sell side liquidity will be what I will be expecting in price and what I will be anticipating in price, a complete run on the sell side liquidity. So this morning, during the London section, price took out Asian section high, did an internal shift, traded lower. On the 5 minute time frame, here is London open, lower prices, retracement, 5 minute fair value gap, and price used it to trade lower. But going in this week, which I've talked about from the daily time frame, my draw on liquidity is to see price run the sell side liquidity. Next is Hero USD. Hero USD, I talked about price trading to the mid range. I told you guys that price already traded to the mid range. Price already traded to the mid range. So I identified the mid range with this line, just to show you guys the mid range of the other block. The price traded to the mid range, retracement, daily fair value gap. On Friday, price used the daily fair value gap as an inversion fair value gap, respected it, did a 1 hour shift in structure, which clearly you can see that the next drawn liquidity should be the buy side liquidity. If dollar were to trade lower and Euro USD were to keep on trading higher, the next drawn liquidity is to see price run the buy side liquidity. On the 1 hour time frame, I was anticipating a retracement to the other block before this impulsive move. That was when I set my limit entry. But the price did not retrace, price just kept on trading higher. I will be looking for intraday continuation. I want to see the 1 hour retrace to a 1 hour point of interest, and I might look for a lower time frame entry. My target is still a buy side liquidity. On Friday, retracement to the daily fair value gap. You can see the shift in structure. Here is a breakers, and you can see how price used the breakers. At the same time, pay attention to the new week opening gap. You can see how price respected the breakers candle, traded above the new week opening gap, use the new week opening gap as a support for price to trade higher, which the next drawn liquidity is the buy side liquidity. So when you have a clear bias on where price is trading to, those points of interest that will help in price to for price to deliver to that draw on liquidity are those points of interest you have to focus on, which in this example, the new week opening gap, 1 hour order block, 1 hour fair value gap. To look at price, if price were to do a retracement, those are the areas to be paying attention to for you to look for your lower time frame entry and anticipate higher prices for price to run the buy side liquidity going in this week. Now, based on where price is currently at, price might trade quickly to run the buy side liquidity and maybe around before NFP, which we know this is the first week of December, which the first Friday is in this week, which is the NFP week. So we have NFP. I'm more like to see price run the buy side liquidity before NFP. I wouldn't be holding any trade to NFP because after the run on the buy side liquidity, I think I will hold up on any trade idea unless I can see a clear bias before NFP. But most likely, I'm not going to be taking any trade or holding any trade to NFP because price is already close to my draw on liquidity. This trade was a trade that was forming since the previous week. We're expecting the daily fair value gap shift in structure, breakers candle, used it as an entry, anticipating higher prices to run the buy side liquidity. So the trade was already coming in place since last week. GBP USD, last week price took out the buy side liquidity, shift in structure. Here was the initial shift in structure. This was just a trend continuation. We're expecting this daily fair value gap that led to this swing high. Price formed the swing high, retracement. Currently, I'm looking at price. We're expecting the breakers candle. Here's the breakers candle. After running out sell side liquidity before the trend higher. And here is the breakers candle. So price retraced to the breakers candle on Friday, did a 1 hour shift in structure, drawn liquidity, should be the buy side liquidity. I pointed out this individual candle as the main order block. That is, if price were to trade deep into the price range, this will be the next drawn liquidity I will be looking for price to use as a support to trade higher. That was the reason I marked out this other block, but at the same time, pay attention to the breakers candle on how prices were expecting the breakers candle. Still anticipating higher prices. Price retraced to the breakers candle, shift in structure, retracement back to the price range. Currently, I'm not looking for price to respect this other block. I think price already traded back to the other block to respect it to trade higher. And there's not much of a fair value gap within this price range. There isn't any fair value gap for me to look at a support for price to go for the buy side liquidity. So if there's any internal shifts on the 1 hour time frame for price to trade higher, I will be looking for an entry. But at the same time, you can still open up to the idea of price trading lower to run Friday's low before the initial shift in structure to run the buy side liquidity. There's still a chances of price doing that. So I will be paying attention to how price will be trading in that direction. But my overall bias is to see price run the buy side liquidity. Daily time frame of USD JPY. On the daily time frame of USD JPY, I talked about this other block and this fair value gap last week. I talked about both points of interest last week on how price will be expecting them. My whole idea was that if dollar were to trade higher, if dollar were to keep on trading higher, I will be anticipating higher prices for price to respect the daily fair value gap. But the fact that price did not respect the dollar order block, traded through the dollar order block, and currently in price already traded below the mid range of the dollar order block, and I'm anticipating lower prices. There's a chances in price for price to trade lower. And I'm going to be applying that same bias to USD JPY. I want to see price trade lower. Currently, I'm still looking at this order block for price to trade to the other block because there's still a draw on liquidity for price to trade to the other block. But looking at price to respect the other block, it's mostly going to be depending on what the dollar will be doing. Then I will be pairing it up with the idea of trading the other block as a support level. But first, the next draw on liquidity in price is to see price trade to the other block, which I have been talking about since last week after price traded to the mid range of the other block on the dollar index. On the 1 hour time frame, traded through the daily fair value gap, retracement back to the daily fair value gap, used it as an inversion daily fair value gap, traded lower. Did a shift in structure, we're expecting fair value gap. After price respected the fair value gap, led to lower prices, which this is an entry from last week. If we were to hold trade throughout the week, then I would have held this trade from Friday to Monday, but I don't trade throughout the week. I don't hold trade from Friday to Monday, mostly because of open range gap, and mostly most of my accounts are prop accounts, which is not allowed on those prop accounts. So I can't hold trade during those time. But looking at price, though I did look at price for price to retrace to the New Week opening gap as an entry level, my stop was at this high. There was another block close to the area, but I was still looking for deeper retracement to the New Week opening gap before price trade lower. But you can see price only did a retracement to the other block. You can see the week, the retracement to the other block, respected the other block, and price kept on trading lower. Now the intraday setup after price respected the 1 hour fair value gap trading lower. You have 5 minutes setup or 15 minutes. Whatever time frame you do use for your intraday setup, you can see the 15 minutes retracement fair value gap respected the fair value gap traded lower. So there's still lots of ways for you to take advantage of the setup going for the other block. Now, I'm currently not in any trade on USD JPY because I didn't hold the trade till next week. So price open before I even look at the charts, price was already at this area. The retracement was to see price trade to the new week opening gap before actually trading lower. But price used the other block and traded lower. That was the reason I'm currently not involved in any trade, although I did set a limit order at the new week opening gap. So last week I talked about gold. I told you guys that we'll be going through gold and we have added gold to the top down analysis. I gave you guys my own personal idea on where I'm currently anticipating gold to trade to and what is my draw on liquidity going further on gold. And I've been talking about gold. I think it have been 3 weeks now since I've been giving a clear analysis on where gold should trade to. And I can say I was right around 90% of the time on where gold should trade to. For those that have been following through the live top analysis, know that I've been calling out gold price action for around 3 weeks now. So last week I talked about the other block when price respected the other block that from Monday I will be anticipating higher prices for price to trade to the buy side liquidity. That once the 1 hour time frame is fully aligned with the idea for price to run the buy side liquidity, that the buy side liquidity should be my next draw on liquidity. I called out the trade, told you guys on how to take advantage of those setup days for you to pay attention, for you to take in those trades. I'm currently on gold. For price to run this high, to create an all-time high on gold, I can say that possibility is not that high enough. I will still stick with the idea of price trading through the buy side liquidity. Now, I might seek higher prices, but I will be focusing on lower time frames like the 4 hour and the 1 hour time frame. Now, the reason is that anticipating a trade or holding a trade for price to run the overall buy side liquidity, I can say is a far fetch to the idea that we are currently on a new month. There might be a retracement back to the 1 hour price range. And I don't want to be caught up in me trying to buy when price is retracing before we're expecting a daily point of interest to trade higher. So my attention, I'll be putting my attention to the 4 hour and the 1 hour time frame. I want to see a trend continuation on those time frame, a retracement to a 4 hour point of interest or a 1 hour point of interest. And the reason I'm calling out two time frames is because I have traders on the FOREX trading empire that do trade on the lower time frame using only the 1 hour and 5 minutes for entry. And I still have those that do use the 4 hour and the 15 minutes for entry, which I've explained on how you can trade with that idea, explain on how you can pair up those ideas to take into the setup. So I want to see a trend continuation for price to trade higher, not looking for a overall run on the buy side liquidity, just looking for those brief trade. But once any of those time frame led to a shift in structure, I wouldn't be looking for any trade on gold going in this week. So there's still a chances of me not taking any trade on gold. Personally, I don't trade gold. I'm just going out the analysis. Maybe I might consider it going next year, but for now, I currently don't trade gold. So let's talk about what price did last week on the 1 hour time frame from on Monday. Okay, here was Monday price action. On Friday, price did a shift in structure, retracement. From Monday open, price open at this order block. Will be price open at the other block. So I can say this is the opening price. Price opened, traded to the other block, we expected the other block, traded higher. Retracement back to the fair value gap. After price traded higher, it traded through the daily fair value gap, which I told you guys to look at it as an inversion fair value gap going in last week. I explained about price using it as an inversion fair value gap. Retracement to the fair value gap, shift in structure. After price created this swing high, running out this high, you can see there's a shift in structure, auto block for your entry. Price respected the other block, traded higher, retracement. You can see the same auto block here, a re-entry to the initial entry. Respected the other block, range around this price range. I think it was on Wednesday when I was in this buy. I did take the trade personally because I wanted to show proof on the signal group that I'm currently in the gold trade that I gave out the analysis of price running the buy side liquidity. So price traded higher, was ranging around on Wednesday. I think it was on Thursday the price did the push higher, gave out the second entry from the inversion fair value gap, which I didn't take advantage of this entry, but it was a re-entry. For those that don't know how I trade gold, retracement, respected it, traded higher, took out the buy side liquidity. So there was four advantages for you to take advantage of this trade. There was four areas for you to take advantage of this trade where price respected the points of interest and traded higher. Now looking at this first entry, stop at the swing low. First target is to see price trade through the daily fair value gap. Second trade, I can see this second trade, you can hold it completely for price to trade to the buy side liquidity. Because if price were to form another entry, it would just be a re-entry to the overall idea of price not going below the inverse on fair value gap. That should be the general idea for you to take an entry from a fair value gap or another block, which in this example, I'm using another block. And you can see how price respected it, traded higher to run the buy side liquidity. So when you have a drawn liquidity, a clear drawn liquidity, you just use those points of interest that are correlated with the idea for price to trade to that bias. Just like how I showed you guys in this example, or I can say trade review based on the analysis I gave out last week. I think the last entry is this entry. Or you can talk about this re-entry here, but let's talk about this entry here. Stop at the swing low because you don't want to see price trade back to the New York opening gap. Sorry. So the inversion daily fair value gap and your drawn liquidity should be the buy side liquidity. So I can say these are the trade for you to take advantage of. Now there's still fair value gaps for you to use as an entry drive for you to look for higher prices for price to trade to the buy side liquidity. I'm just pointing out to areas that I will personally be using as an entry level. So going in this week, I told you guys pay attention to the 4 hour time frame and the 1 hour time frame. You want to stick to those trends, but at the same time, pay attention to the daily points of interest. That will give you a clear perspective on where price should trade to. But the overall idea is that the gold is on an uptrend, trading higher, and we might see higher prices. But we want to stay at the safe side so that we don't get surprised by any price action. We want to stay at the safe side that whenever price retrace to a 4 hour point of interest or 1 hour point of interest, we use it as an entry drive to anticipate higher prices to run the buy side liquidity. So that is it for this week top down analysis. Make sure you go through price and take advantage of it. And if you can't take advantage of it and you don't know how to take advantage of this trade breakdown or top down analysis, you can always join the Signal service where I do post the trades on the Signal service. So whatever trade I do talk about on the live top down analysis is fully available on the Signal group. You just need to register and subscribe to the Signal group. But currently I'm giving out a 7 days free trial for you to know how the Signal group will work so that you can take advantage of the Signal group. So that is it for this week live top down analysis. See you guys in next week live top down analysis. And make sure you check out live top down analysis trade review that I do post on Sunday. So make sure you check it out.